Hello everyone. Welcome back to Neffy Cat. We're really glad to see you today. We're glad you can join us. My kitty has some birdies fluttering around here. He's taking distinct interest in. So today I want to address something that it was very new for me a few years ago. And it's an important part of when you deal with building wealth. And that is dealing with capital gains tax. So our capital gains tax, as you know, is a tax that people pay every year from your investments or your trades. But the nice thing is that it's only based from the ones that you actually sell. Those are called your realized gains, and if you haven't sold them, those are unrealized gains, and no capital tax can touch it, can they? Yes. Okay, so there's two main types of capital tax when it comes to the stock market. There's also, capital tax on real estate and such, but today I'm going to specifically address the stock market. So there's a long-term capital gains tax. And that one, we're going to have this one be for the long-term ones. The secret with this, it's lower, and it's based on things that you've held for over a year. So if you've had 100 Tesla shares, for example, for 5 years, let's say, and you've held on to those, well, if you sell any of those would be subject to the long-term capital gains tax. There's also the short-term capital gains tax, and that is what a lot of people that are new to trading get themselves into. And I even include myself because I, especially the first year, did a lot of day trading and short-term, mid-term swing trading. A lot of times those types of traders get hit higher with the capital gains taxes because they have the short-term. Also, you could think of it as the regular capital gains tax. And interestingly about short-term is that it's actually based on your income. Well, same for the long term, but you're taxed at your income rate. So if I have a 15% income tax rate on my earned income that I would have, then I would be more likely to be paying 15% short-term capital gains tax as well. So that was a very interesting little fact that I didn't used to know either. Another interesting thing about capital gains is that you can use your losses. If you've lost money in the market, which is extremely normal, no trader doesn't lose some money, but hopefully we have more gains than losses. But you can write those losses off to contrast against the capital gains taxes. That can help. But it is really can be very helpful. So, let's say that you had a $60,000 account, and let's pretend that you've gained 5 and you made another 20. And so let's pretend that you had like about 25,000, but that let's say 1,000 of that was a loss. And that basically would have brought your income down by 1,000 to 4,000 gains instead of 5. But you could take that $1,000 loss and you can write that off against it, just as I'm explaining here. And that can very much help lessen that for people too. I'm just giving an example here. So this is on the long-term rates. If you're single, you can make up to 40,000, and you'll have 0% small or large capital gain tax, and then 15% if you make up to 445,850 from the moment I'm reading this in 2021, and then 20% if you're over 445,850. It's going to change year to year, state to state. That's just the federal current rates right now. A lot of states also have things like capital gains as rates as well, and I didn't do any research on that. Please make sure to see your CPA about such things, because even though it's important for us to know, I'm not a professional financial advisor or tax advisor, but I am a person who loves sharing with you on YouTube, and I feel very grateful that you joined us today. Thank you so much, and I'm looking for some little paws. Don't forget to take your paws and and press that like button and press the subscribe button. Thank you very much. And the notification bell. Don't forget to share this video. There might be somebody else that you know who doesn't know anything about capital gains tax. Perhaps it's your first year even dealing with that and having invested or traded for the first time. Well, thank you all so very much and have a wonderful day. Bye-bye, everyone.